Welcome. I am the average American investor. I wanted to start a YouTube channel to help to educate people about the stock market and about investing and about personal finance. As a quick disclaimer, I'm not a financial advisor. If you have questions about your personal situation, you should contact your local financial advisor. This channel is intended for educational purposes only. Um, this channel will be about investing in stocks and bonds and other investments. Um, my personal philosophy, and again, this goes to my personal opinions. Um, One of my personal philosophies is that there's 7 steps in creating wealth and managing your money, and I'll put some information about that down below. Step number 1, I think that everybody should create a budget. For example, an Excel spreadsheet uh, where they show their income and their spending. So ideally, you would have more income than you would have spending. So you'd have some money each month to work with. Step number 2 would be to start an emergency savings account, starting with $100 and adding money into the account every month until you have 12 months of living expenses saved up. Again, it's often good to put this into a savings account that earns a little bit of interest. Step number 3, you should pay down your debt, starting with the highest interest rate credit cards first. Pay down all your personal debt. Number 4, you should invest 10% of your income into a retirement fund, such as a 401k, 403b, a Roth IRA, or just a general IRA fund. Step number 5, you can save for college for your children in a 529 account. Step 6, you can invest in low fee mutual funds. And step 7, you should diversify your assets. And by that I mean you should have some cash, some stocks, some bonds, some international stocks. You should have a variety of assets available because, of course, assets fluctuate up and down, and you want to have, a variety of assets at your disposal. Regarding the current stock market, of course, the stocks are relatively high with respect to earnings. Stocks are expensive, but bonds are also expensive. Yields are low. Bond prices are relatively high. So it's difficult to find an inexpensive asset to invest in. That's why I think it's important to, again, diversify, have some stocks, some bonds, some cash. Again, have a diversity of assets available to you. Of course, dividend-paying stocks are good. You can, of course, invest in mutual funds. I prefer the low-cost, low-fee mutual funds. You can often get into a nice mutual fund for $3,000 and then add to that every month. So yeah, at this point, I guess I would recommend starting off with a small investment of, let's say, $3,000 into a dividend-paying stock fund, a mutual fund, and then you can add to that every month. And you can also invest in individual stocks, and again, you can invest in bond funds. There's also Bitcoin and other cryptocurrencies. Um, so that's where I see it right now. Again, keep your portfolio diversified and to just invest slowly and to dollar cost average. So you want to invest a little bit each month. One of my philosophies is time and pressure. So over time, if you apply a little bit of pressure each month, you can build up a bigger and bigger account. So for example, if you start with a small savings account, start adding money to it every month, over time, of course, it becomes a fairly large account. And I think you want to do things at the same time, because in the real world, in real life, we have to do things at the same time. For example, as you're building your savings account, your emergency savings account, at the same time, I think it's important to pay down debt, at the same time investing in your retirement fund, at the same time investing in a college 529 fund, and again, keeping your assets diversified. So I think it's important to do things at the same time because again, in the real world, we often have to do things at the same time. We can't just focus on, you know, exclusively one thing at a time. So, all right, so this is my first video. If you like it, please give me a like, subscribe, and leave a comment down below. And thank you very much. Again, this is The Average American Investor.